Hello, everyone, and welcome to today's NinjaTrader Ecosystem event with Ephraim of Day Trade Like a Pro. My name is Juanita, and I work here in the NinjaTrader Ecosystem team in the Denver office. Before we get started, I would like to take a moment to go over a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should be sent directly to the NinjaTrader brokerage team. Lastly, if you are new to NinjaTrader, please take a moment to sign up for a free live NinjaTrader demo with real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. Before I turn the mic over to Ephraim, it is important to understand that futures, foreign currency, and options trading contains substantial risks and is not suitable for every investor. It is possible to lose all funds deposited and even lose more than your initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information or for a full copy of the CFTC risk disclosure, please use the following link. Also, please remember that these trading sessions are not a solicitation nor a recommendation, but simply educational in nature. Thank you again for joining us. And without further ado, it is my pleasure to welcome to the webinar room, Day Trade Like a Pro. Go ahead and take it away, Ephraim.
All right. Okay, well, first of all, to start off, I just want to say a big thank you to NinjaTrader and the team there. I've used NinjaTrader for well over a decade, and we really, I mean, I like NinjaTrader. I think a lot of our, I would say the majority of our traders at Day Trade Like a Pro use NinjaTrader. And we really love doing these events with NinjaTrader. So it's a real privilege to be here. So my name is Ephraim. I started Day Trade Like a Pro years ago. And then also on the webinar with us is David. And David has a background in the hedge fund world, and he is really the guy that makes all the magic happen at Day Trade Like a Pro. If it was up to me, it would be a real disaster. So we're really grateful that he's here. And I'm just, I'm good at teaching. We'll dive into the charts today and we'll get right to it. But all the things that happen behind the scenes that make today possible, that's all David. So thank you for that, David. And he'll be monitoring questions as well. And if I miss anything, he may jump in here as well. So, all right. Let's see here. So let's just jump right into it. What we're going to talk about today is how institutional traders decide where to trade. And today's not going to be anything, you know, there's nothing. It's going to be really any kind of shiny objects here today. It's really going to just be exactly what I have done for years in my own trading. And I'm going to do my best to teach you how it's been working for me and how you can implement it for yourself. So, of course, we've covered the risk that is involved in trading futures. This is a picture of me from way back in my modeling days that never happened. So here we are. So here's what we're going to cover today. You're going to learn exactly how to trade alongside big institutional traders with precise entries. So let's see. I don't know what the delay is. So Jaime, thanks for letting me know it's not updating. How is it now? How far behind are we?
We're at precise entries.
Okay, so we're here. Yeah, it says my internet connection is unstable, but I'm not quite sure what that means. So how about that, David? Does that load the next one?
Yep, good.
All right. So we might have a little bit of a delay, but if you listen to me, then you'll get what's coming up on the slides one way or the other. So let's talk about what moves the market. So the price of markets move because there's more aggressive participants on one side of the market. Now there's some talk out there where people will say, well, there were more buyers than there were sellers. And that's actually not at all the case, because you can't have a buyer without having a seller. So what it comes down to is that there's more aggressive buyers or more aggressive sellers. That's it. So that's really all it comes down to, is that one side is being more aggressive than the other side. And when you look at, let's see here, there we go. So when there's a large imbalance, you can really see that on a chart. Okay, that really shows up, and we're going to jump in and we're going to actually look at that today of what an imbalance looks like. And that creates opportunity. When you can spot that imbalance on a chart, that's going to create opportunity to participate with buyers or sellers that may have been left behind on the initial move. So what moves the market? Simply put, when supply exceeds demand, the price decreases. And when demand exceeds supply, the price increases. It's really put, you know, when you want to think about it. So why are we talking about this? You want to think about it in terms of what's actually driving the price of any market that you trade, no matter what it is. It's what's driving it is that you have more demand or more supply, and that creates an imbalance in the market. And we'll look at it on the charts and we'll see exactly what it looks like. So this could really be, what I like about it is it can be standalone, or you could couple it with any other indicators or other price levels or other things that you use and really create some confluence in your trading. So I've taught this where people use it standalone, and I've also taught it where it can be coupled with whatever you're using. I think that you can add something to it with what we're going to show you here. So let's go take a look at the charts. So let's see here. No, that didn't do it. So we'll have to close out of this. And then it's important. One of the things I want to point out is that what we're going to show you here today, you can really use on any kind of a time frame. So what I'm going to do is I'm going to just load a 10-minute chart on the S&P, and I switched over to my chart. I don't know how quickly that's updating. David, is that updating right away when I do that?
Yep. Yes, we're good. Much quicker.
Okay. Well, we have 1,000 days loaded, so I think that's going to cover us. So let's go in here. We'll go to properties. I just want to change my crosshairs real quick to make it so it's a little easier for you to see. All right, that should be real easy to see. So I just got rid of today's, this is just yesterday, and we're just going to do this going from yesterday. So what we want to look at is we want to look left on the chart, and I'm going to just start right here, which is sort of this big move up. And what this move up right here, and again, I'm doing this on a 10-minute chart. You can do it on any kind of chart that you want, but I'm doing this on a 10-minute chart. And I like that for day trading. If I was swing trading or position trading or, you know, something longer term, I'm probably going to use something like an hour chart or a 4-hour chart. And I may even jump around and show some of those if we want to look at some of that. So what happens here is that this big move up is telling us that let me just really zoom in on this so we can see this. By the way, you'll notice my candles look a little bit different. I use yellow for up candles and blue for down candles. That's something I've done for a long time. And it's just what I do. That's one of the ways that I've done this for a long time, and I've used these different colors for probably a decade now. So what this tells me right here is there's this big, that all of the sudden, you look right here, what's happening, not a lot's happening. The market kind of spiked down right here and then didn't get much lower right here. And then out of nowhere here, this kind of big move up. So the market went from, let's just call it 43.87, and went up to around 44.12. So pretty big move. I mean, that's a pretty substantial move out of here on the S&P. So somewhere in here, buyers got interested in participating here in the market. And this also happens to be right at the open. So that could obviously play a part in that. And then if you look at what happens, so this big move is the first thing we're looking for. And that tells us there's an imbalance. And then we want to keep looking left. And we want to see just before this big move up happened, what happened prior to that. And that's this right here, this little blue candle. And so what I like to do is highlight this. And I'm just using the hotkey in NinjaTrader. So if the wick was on this candle, I'd measure that. So I'm just measuring right here down to right here. And then what you can see is that when the market came back over here into this demand area, there were in fact more participants that wanted to get in the market when price came back here. There were more aggressive buyers. So buyers stepped in here and pushed the price up. And when it came back into this demand, the buyers stepped in again and pushed the market higher once again.
Ephraim, can you give an explanation again for how you drew the highlighted area around the candles for the demand area? Your audio broke up a little bit.
Oh, yes. So basically, what I'm looking at is there's this big move up right here tells me that buyers got aggressive here. And what we can see is sellers had been more aggressive. Basically, this was things were kind of in balance in this range, and then sellers broke out down here. And then all of a sudden buyers stepped in right here, and there became a big imbalance in buying. Now let's ignore that this was right at the open, because there's other factors that could play in there of, people say, why did it happen or whatever. But simply put, what happened is buyers got more aggressive, and that drove the price up. And so we're kind of making the assumption, if you will, that what happened here is buyers got more aggressive, and there were buyers who wanted to participate on this move and could not, or maybe there are buyers that did participate on this move are now defending that position when it comes back, and so they're buying again. But basically what we see is as soon as the market dips into this area, and the way I drew that was from, this is the move up, that tells me there's demand. Now I got to find where the demand is. And demand meaning there's an imbalance in supply and demand. And here's the imbalance. It's this candle. When I'm drawing demand, it's the body of this blue candle. And it might be multiple candles, but in this case, it's just this one candle. And we'll look at a lot of different examples. It's the body of this blue candle down to the wick of that. Now, if I was telling you something that I watch for in my own trading, then what I would be looking for is that I ideally would like for the body of one of these candles to hold. That's kind of a perfect world scenario. That doesn't always happen that way. But that is something that I would look for. And it's very possible that when price comes back into this demand area, it could come through it a little bit as well. We could get kind of a probe through here, break the low, and then rip out of that area. So we'll get into some of the nuances of that as we go on a little bit more. But basically, if we see right here, here's this area. And I'm going to show you different ways that we use this. And also, I said earlier, ways that we can combine it to work with, to start to create some confluence, whether that's using indicators that you already use, or we have something called prediction points, and I'll show you those on a chart, and we can see what that looks like. But in the simplest form, this is actually the same kind of a thing as we had a lot of selling happening right here, a little bit of pausing in that selling, and then this would make me a little skeptical about maybe a low being in with why do we have this big wick right here on this 10-minute chart? Obviously sellers were aggressive, buyers stepped in, this ended up closing up here. But let's just get rid of this for a minute and look right here. So now I'm drawing supply, and the supply area would be from the open here of this candle up to the wick. Okay. So basically you're drawing it, whichever way you're drawing it, it's from the open of the candle to the wick. So if you're using this blue candle, and it's always going to be, demand is always going to be drawn in using an opposite candle. So you're going to do it from the open to the wick. And if you're drawing in supply, it's going to be from the open to the wick. And then the market did drop down here and then came back into this supply area and then did fall from there. But this, for different reasons, would not be as good of an area that I'd be looking for. And we'll get into that a little bit more. We have a whole, I think we have a whole free series of trainings that we talk about how to score these types of trades and rating them. And so we can, that's something that we've kind of made available. But you can see, again, if you, just as kind of a side note, so this came back into here, right? We had this area that we drew in right here. It came back right there. And then notice the next move came back into this area again. Okay, so I don't know if anyone was catching that, but do you see right here, this was something from the previous day, and you can see the market just came short of that, just barely on this move down right here. So that would have been the open here was 83.25 and the low here was 84. So missed this one by 3 ticks. But if you notice right here, big move up out of here, and then notice it came right back into that area again right there. So these are kinds of trades. These would be like a kind of a quick retest trade. And then I also like these types of trades where it comes back and it might take days even to come back into that zone. Somebody asked, what am I trying? So good question. So what am I trying to show with the measurement of the candles? All I'm doing is I'm not really measuring anything. I'm marking off where I think there's potential. So let me show you this. So this big move up tells me there's an imbalance in the market potentially. And so in NinjaTrader, shift function 2, and I'm going off of this. Let me really zoom in here so you can see exactly what I'm doing. So this move up right here, this candle and that candle, that tells me there's an imbalance potentially. Well, there was an imbalance, and I'm now wanting to see if I think that imbalance is still going to be there when the market comes back. Okay. So what I'm looking at is I'm looking at this blue candle, and I'm taking the top of that, so the body, which would be the open of this candle, and I did shift function 2, and then I'm drawing down to, in this case, the wick of that candle, or it could have been the wick of this candle. It's just that this one's lower. So then the wick of this blue candle, and I'm going to move my crosshairs over so I get it right on it. And that tells me there is an area right here where there's potentially an imbalance, where there's more demand than there is supply. And that really gets sort of solidified when the market comes right back right there. And then later on, the next day, the market came back here and missed that by 3 ticks. And that happens. That's part of trading. Every one of us here have had something like that happen, right? And that's what I'm looking at. So I'm not really measuring anything. I'm marking off where I believe the imbalance to be. And that's how I'm doing that. Now, if I look right here, again, is this amazing? Probably not my favorite. And again, we can, David, I think if they send us an email to support at Day Trade Like a Pro, that we can shoot them a link with all of the training on how we score these and that whole process, right? We can handle that for them.
Yes, and there'll be a way for people to get access to that at the end of this as well.
Great. Okay, good. So right here, you can see that same kind of thing. We can see a little bit of an imbalance here. Nothing crazy. It's also kind of late in the day, but there is an imbalance here. The market opens. It came back. Let's see, what was the low here? The low was 93.25 and the open here was 93. So it came within a tick. And in my book, a tick is close enough. And then, pretty good move up out of here. So if you go now, you can do this. I'll show you one other thing here real quick, just to give you, here's a 60-minute chart, just so you can start to get an idea of what this can look like on different time frames. And if we look at, I'm going to find an area that I think is a real good area right here. So this, to me, on a 60-minute chart, this would be a really good area where I would want to trade. And look at this huge move up here before it comes back here on a 60-minute chart. Now I know it came here, and on a 60-minute chart it probed below there, and that may have been into a lower zone from something over here, and we're not going to get into all of that right now. There's a lot that we could cover, but I want you to just see what I'm marking off, which was this right there and right there. And then what we're going to do is we're going to go back and we're going to look. So that happened in the morning. That was 412. And then on 412 in the afternoon, around noon, the market came back into this price. So we're going to go back and look on just a 5-minute chart and see what that looked like. So you can see that area is marked off. We're actually trading back there again. So I need to go back to this day. So here we have, this was when it came back into that area. And then you can see a little bit of a reaction. And I don't want to overwhelm you with anything. And we also talk a lot about this, but you see what I just did here was this just a fib tool that I have just the 50% level. And a lot of times they're going to use 3 areas in these supply or these demand zones. We're going to either have right here at the top, in the middle, or at the bottom. And what you can notice is how I like to trade these is I either have an entry right here, just sitting right here at the top, a limit order to buy, or a limit order to buy here, or a limit order to buy down here. And you can see even when it broke here, it came right back, tested that 50% again, and then eventually came back and held down here, which is, these are all signs I'm looking for. Probed above here a little bit, came back to the 50% level, and then took off out of here. So I'm not saying it's going to work every time. And, you know, if you go back to what I said at the beginning, I'm not going to show you a whole bunch of shiny objects. I'm trying to show you stuff that gives you a way that you can dissect and break down and look at the market. And so there's a lot of things that I could show you in here, but that's pretty, I mean, I don't know what kind of trader you are or what kind of approach you're taking to the market, but this midpoint is 43.89, and before it came back, it bounced 13 points out of this level. And if all you're looking to do is make, you know, 5 or 10 points, a lot of these levels, especially on a higher time frame, like on a 60-minute chart, those will give you that. And then you try that, that one works for 13 points, and then it breaks. Maybe you lose a couple of points trying it a little lower here. And then you resell it when it comes back up to that 50% level. And that one works from 89, it dropped down to 70, we'll call it 76, 75.5. So there's another 13 points. So also probably not coincidence. Did you notice something here? We have 89 down to 76, basically 13 points. And this was 13 points. So to just illustrate this point, if I draw from where this first came down here and probed above and bounced up to here, and I draw that down to here, look where 50% of that is. So it moved an equal distance above that 50% level as it did below it. I don't think that's coincidental, but I've been doing this for a minute, and those are the kinds of things that I'm looking for. So what I'm saying is that 13-point bounce over here would be pretty obvious to me that I'm looking for. Initially on this, I would be looking for 13-point move down here. If it can move 13 points that way, probably going to move 13 points that way. So that's a little trick that I've picked up over time. It says my internet is unstable, and I don't know if that is causing me to not be able to.
You're still
you
good.
guys to be able to hear me. Okay, great.
Still good.
So
we do need to
we're going to move
forward
on
a little
here.
bit. Yeah.
We all know how I like to, I could do this all day. So, okay, so here we go. So imagine a trader with tens of millions in buying power. And what do you think they're using to make decisions of where to buy and sell? And I don't think they're using a bunch of different moving averages or any kind of fancy indicators, that kind of thing. They're really determining what they're doing based on price. And I could tell you story after story about that, but I know for a fact, and I know a number of institutional traders, and they're looking at price. That's what they're looking at. So why doesn't everyone just trade this way, whether that's using supply and demand or whatever it might be? And there's a number of different ways to determine what price to trade. But why doesn't everybody do that? And here's the reality of it, is that a lot of traders have this flea market trader mentality. They go from thing to thing to thing to thing to thing. And it's funny, I like golf. I'm into golf a bit, and golf and trading are really similar type of markets, it seems like. If you watch, if you start looking up different things in golf, what you'll start seeing is all these different ads for like this special club that fixes this, and this club that does that, and this fancy gadget that fixes this thing about your swing. And trading's very much that same way. You know, there's all these special fancy things out there that are going to fix whatever it is. And there's so many traders that, you know, go for that. And so it's just a mentality of go from one thing to the next thing to the next thing, instead of focusing on something and getting really good with it. And that's a big part of the problem. And then that creates confusion. And there's so many different indicators and so many things out there. What even works? And then a lot of traders just flat out don't have the ability to map the market out ahead of time. And then it's kind of funny, because I've heard guys who I have a lot of respect for, and they'll say things like, there's no way that anyone could, with any reliability, predict what's going to happen ahead of like a tick or two in the market. Anyway, yeah, I just think we've really disproven that time and time again. We've disproven that you can actually map the market out ahead of time. We do it every day. So I see there's questions, and we'll actually leave some time for Q&A. So we'll make sure we get to that. So how do you trade with the banks? You have to identify where big money's likely to trade. I've shown you one of the ways to do that. I'm going to show you something else. And then you have to decide where the trade's invalid. So you have this idea for a trade, where does that get invalid? And then identify targets where big money is going to drive the market. And really, it's as simple as, in most cases, you can really simplify that to say that the market will move from supply to demand and demand to supply. And it will continue to do that. It will go through that cycle. So in 2007, we created an algorithm that we use every day to identify prices where we believe there's a likelihood that there's going to be institutional money that will trade there.
Ephraim, we lost you there again.
So I'm going to switch over to the phone, and that's going to, I think that'll fix it, and we won't be dealing with this. So give me just a minute here.
Okay, is that any better?
We can hear you.
Okay, great. Okay, so in 2007, we created an algorithm, and I've used this every day to identify these prices in the market. And one of the things that's unique about it, I think, is that it has this ability to adapt to different conditions and changes in volatility, and not even just adapt to it, but in a lot of cases, even predict when that volatility is going to increase or likely to increase, or when these big moves are going to be. And if you think back to in 2007, we had these markets where in 2007, 2008, obviously we went through this time, when Obama was in office, and we had markets. I've looked back in notes when the market would have moved like 6 points or 8 points on the S&P in an entire day. You know, we had 8 points of movement for the entire day on the S&P 500. And these have really adapted to that. So I'll show you this a little bit on, on a chart here. But when we combine supply and demand, what I've just shown you with prediction points, now we have this, what I talked about earlier, this confluence, and it gives us a confirmation to trade in certain zones at specific prices, and then we can really define the risk. Let me go show you what this looks like. So if I go in here, and this is just, again, this is just a 5-minute chart on the S&P, and we'll just go look at today, and I will show you what today's prediction points looked like. And go It'll load this. So this is just today, and we'll break this down just a little bit. So in simplest terms, we have these blue lines and the white dotted lines. And the foundation, the whole theory behind it is the market will move from blue lines to blue lines. Okay, so it'll go from what we call critical price, these blue lines, to critical price. That's how the market will move. That's the theory. So if we look here, starting at the beginning of Globex, you can see, I just want you to get an idea for this, and then you can see kind of back and forth right through here, and eventually it does come down into here. So if you look here at the open, this is today, this is the opening candle for today. I'm on Pacific time, so it does probe up above through here, and then the market drops here, and notice where it drops to. So this blue line to the tick, and then bounces. This is not necessarily the kind of trade that this is certainly a valid idea where you could trade something like this. I like the retest of these, and I'll show you that in a second. And then next, look at the next drop. And this is just today, so it's not like I'm making this look any better than it, you know, normally looks. I mean, today might look better or worse than any given day, but this is pretty average of how a day with prediction points is going to look. And then notice the next drop, where does it go? Right down here to the CP, which is what we call the critical price. So right down here to this prediction point. And then bounces, kind of stalls out here. These are really close together. So this tells us right here, these being so close together tells us that the market is very likely to consolidate between here and here. It would be very likely that we get some consolidation in here. And you can see that does happen. Even more likely to consolidate in here since these are also tied together. And you notice there's this bigger gap in here. And then what finally happens is we get this move down into here. It goes, this prediction point is at 44.05 half, and the low here is 44.03. So it broke this by 2 points, which is not really that big of a deal, and then came back and held right here. And then took off again back up to here. These are the kinds of trades I like. So either a trade like this where we're getting a retest, or a trade like this where we're retesting. So either here or here. So it's coming back up here and we're retesting this. And then if I can combine that with, obviously we can see that we eventually dropped even further. So this kind of a trade, it drops, it comes back up, retests, drops, comes up here, retests, this area drops, retests right here, and then drops again. And so somebody asks, where are the entries? Well, I mean, if I'm trading this level, it's a very specific level. That level's at 4,400. I'd either just enter at the level or within a couple of ticks of the level. And then normally I'm going to have a couple of points of risk, something like that. Just kind of depends on the day. I'm going to adapt to that as the day, as the day is going on. So so that's how today looked. Now let me give you, why do I like supply and demand with this? Well, here's a simple example where, what do you notice right here? This is definitely an area where we have supply. We have this big drop out of here and this candle right there. So we have the supply area. And I bet even if we looked at that on a 10-minute chart, it still looks, oh yeah, we have that big wick. So sometimes if I can't see anything I'll keep going down. You can even do this on like a tick chart, although I think it's less reliable. So if you look right here, so what's that? Supply. And then notice over here when it probes above the prediction point right here, where does it go? It goes up to this area where there's supply right here. And if I'm entering right around this area, whatever the open of this candle, so 29.75, and then the high here is 31.25. So it probed 6 ticks into this area and then sold off from there. So that's the kind of, that trade would definitely work. And then what's your target? Well, your target, so we talked about targets. So your entry would be, this is pretty choppy through here. I would pretty much try to avoid this. And how would you know it's going to be choppy? Well, look how close these levels are together. So that's all part of a training that we have that you can. It's actually something that we've provided for free that tells you how to use prediction points. So we'll talk about that in a minute. But you would know, anybody who's been using prediction points and watched that training would know this is an area where the market's likely to be choppy and would want to avoid this for the most part, or maybe just scalp in and out of it at most. Little probe up above here, that holds within 6 ticks. And then where's your target? Well, we already tested this area right here. So likely the market's going to come down to here. So the move is from 44.30 down to 44.05, so 25 points. And then that's exactly what did happen. And then a bit of a rally from there back into here and then drop from there. So that gives you an idea of prediction points. And we have hundreds and hundreds of videos available where we've shown daily reviews of prediction points, and you're welcome to go look at any of that. So let's jump back over here to the slide, and we'll. Okay, so when we combine prediction points, supply and demand, and then I've been doing this for 15 years or something like that consistently, and there's other things that I use with prediction points. There's other methods that I have learned along the way of how to use prediction points. That's what we call market accelerated planning. And we basically, that stands for map, and we map the market out in real time. Usually there's a post in the morning that kind of breaks down what's happened, and then breaking down what we are mapping out is going to happen. What are the key levels that we need to watch? Where are the opportunities for bigger moves, if they are? Where are the areas that we might want to avoid? That kind of thing. So breaking all of that down. And that's a service that we currently offer, and we have a number of subscribers. It's $7,997 for the annual service, and that's really the only way we've ever offered that. So let me tell you what we are offering here today with the opportunity with NinjaTrader. So we have 5 days of instruction and live trading, and that will be led by me. And I can promise you we'll make sure we work out whatever bugs we have with whatever audio. I've done a lot of presentations and a lot of workshops, and today's definitely been the most buggy. So I appreciate you guys sticking with us through that. So 5 days, instruction, and then live trading. So I'm going to break it down in real time, and then we'll actually get the opportunity. I'll trade that, and I'll show you how I'm managing those trades, et cetera, all of that. And then you're going to learn exactly how we're mapping out the markets, and I'll show you exactly what I'm doing and how those translate into the posts for map. David, are you saying anything? Did I?
No, I think that's great.
Okay.
I think you're being a little humble about what we're going to offer. I mean, I think, what you and I have talked about, the goal is in this 5-day workshop, which we're starting on Monday next week, is that everyone who's in the workshop is going to be able to trade right alongside you and understand and get into exactly how you do map every day, combining supply and demand, combining prediction points, and any other tools that you use to teach these traders to trade right alongside that. So it's an hour and a half every morning, so 7.5 total hours of training and live trading. That's available to everyone who is here on today's workshop. And apologies for the typo on the header on this. I
just noticed that as well. We can't spell workshop, but we do know how to trade. So
we do know how to trade, and we know how to teach people how to trade. I think that's an important part as well. And so I'm going to post a link in the chat right now for people to go and sign up for that workshop. There's some more details on that page for you. Ephraim, you might want to hit space bar or whatever you go to the next bullet.
Oh, yes.
It's in the bottom
Yep.
section there. And we'd love to have everyone come join us. You're going to get, so also with that too, you're going to get prediction points that Ephraim walked you through. All of the training that is with prediction points, there's about 16 total hours of training, which includes how we rate and score it and all those levels. You're going to get access to the map for the week, that's the $8,000 per year thing. So you get access to that. We haven't talked about this, but we have a live trade signals offering that we do as well. And we're going to give you the access to that as well. So basically you get full access to everything that we do, plus trade right alongside Ephraim, who's the head trader, CEO of Day Trade Like a Pro.
Yeah, that's sometimes, talking about yourself is a little bit weird and saying, especially in trading, it's a pretty tricky thing. I mean, I tell people it's probably, I think it's the hardest thing I can think of as a way to make a living. I think it's one of the toughest ways to make money that I could possibly think of. And, there's some myths out there, like everybody, like there's traders, it's like they make money every day. And it's like, that doesn't really happen. You make money, you lose money. Both sides of it happen. But I've been doing this for a while, and we've taught some traders who I think have turned into be pretty good traders. And I'm really a student just like anybody else, but I think I've learned some things along the way, and that really is what has turned into MAP. So MAP has really been where we've just tried to teach all of the best things that we know about how to trade and how to map out the market and how to identify low risk opportunities. And maybe you're not going to do exactly what we do, but I'm sure that over a week of us trading together, you're going to pick up some things that are going to be really, really useful for you. Now, MAP, currently I just use MAP. I do MAP for the S&P 500, and I primarily trade the S&P 500. And that's really just due to size. And, being able to put on, you can put hundreds of contracts on the S&P, and that's really fine. There's no problems with liquidity. And some other markets are a little more thin. The NASDAQ, we have a lot of traders that love the NASDAQ. And it's just the liquidity is a little thinner. And so it can be difficult. If you're trying to trade a couple hundred contracts, it could be difficult to get filled at certain times. So I trade the S&P because it's been my bread and butter for years, and it's what I've done for a long time. But everything that we're doing is you can translate it into other markets. So prediction points are currently available on the S&P 500, on the NASDAQ, on the Dow, on the Russell, on gold, and on crude. And we're working on bringing other markets and making other markets available. But that's what it's currently available on. And then when we started, David mentioned something about, so you're going to get prediction points for all those markets. You're going to get MAP, and you're going to get access to live trade signals. And then on top of that, we're going to trade together. And I'll just be sharing my screen and showing you exactly what I'm looking at and how all that translates into MAP and where we're looking for the best, low risk opportunities, that kind of thing. And so I'm going to just do my best to show you that over the 5 days that we're together. So that starts on Monday, and it'll go until Friday, and we'll be together 9 until 10:30 Eastern time every day. And then I'll show you how I'm translating that into what we call live trade signals. And I don't remember exactly. You can go look on the home page, and there's a link where you can go see what the results of that have been. But when we started, I didn't really know if we would be able to do it successfully. And it's been, I guess, over a year and a half now, probably. And I think it's turned out to be a real success, and it's been profitable in that time, largely profitable. So,
and we post all the trades and all the results.
Anybody, a 6-year-old could follow it. So I think it's it's fairly simple, very rule based, and a lot of room to improve on it if you're a decent trader. So
yeah, and we post all the results in every trade for that and everything else. And there's a methodology in how Ephraim identifies those, and that's part of what we're going to teach. The workshop will 100% be recorded, and anyone who signs up for the workshop will have access to those recordings for life. So you can always go back and review them. and apply them to your trading. And I think the key goal and a big thing that we talk about at Day Trade Like a Pro is finding a trade strategy and approach that fits to your trading personality. And our goal in the workshop is to work with you to take what we're teaching you and apply it to your trading personality, so you have something that works for you.
Yeah.
Not copying what another trader does or copying another system. It's actually taking these tools and methodologies and approaches and applying it in a way that works specifically for you and your personality.
I think that's a really important, so thanks for saying that. I think that's so important when you think about trading, and there's all these kind of out of the box things, and it's just like there's a one-stop shop that, you know, you're going to buy something and then, you know, you could just go follow that and be a successful trader. And I don't know a single trader that's ever worked for. But what I would say is that it's really about finding what works for you and what works for your personality. That's so important. And so what we're teaching is in a way meant to be so that it can be adapted to you. And I would say, and I think, David, you would agree, out of every successful trader that we've had come in the door at Day Trade Like a Pro, you know, I don't think we've had a lot of traders come in the door that weren't successful and became successful, you know, profitable over time. And I don't think a single one of them trade the exact same way. They all do something a little different. They all kind of have found their own thing that they do that works for them. And, you know, a lot of them, I'd say the majority of them use prediction points, and some of them moved away from using prediction points over time because they found something else that worked for them, or, you know, and the way they use prediction points, Jaime, who's on the webinar today, he's a really phenomenal trader, trades the NASDAQ. And I think his bread and butter is trading basically 50% levels in between prediction points. So he doesn't probably even trade prediction points as much. He trades the level that's halfway between prediction points, which is kind of fascinating. So there's just a little bit something different that everybody does, and we're going to dive into it. I'm personally really excited to teach this next week and really dive into it with you. So we'll really get to that.
Hey, Ephraim, I just wanted to let you know we're going to have to be closing up the room here.
Great. Thank you.
So you go ahead and get it closed out. Just thank everybody for their time. I don't know if you want to throw your link in the room just one more time, or
yeah,
provide
David,
an
will you
email.
just put that in there? And I do want to, so thank you for that. And I will wrap it up here. And first of all, really appreciate you guys taking the time to be here, and apologize about the technical difficulties that we had here today. So thanks for really sticking it out and making it work here today. We'll obviously, hopefully the recording turns out a bit better than the live session did. And to wrap all of that up, I would just say it'd be great to have you join us in the workshop. I think you'll find a tremendous amount of value there. So really appreciate everybody being here today. Hopefully it was useful. David, I don't know if there's anything you want to say to wrap up, but really appreciate you guys. Thank you.
That's it. And just any remaining questions or anything, email us at support@daytradelikeapro.com, and we'll get those questions answered. Thank you very much. Thank you, NinjaTrader, very much for all of this as well. Really appreciate it. Of course.
I just want to thank Ephraim and David for taking the time to share with us today. If you enjoyed today's session, we hope that you will join us in future webinars. We'd like to also remind you the information provided in this was that of Day Trade Like a Pro and not of NinjaTrader. All information is for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see everybody in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem. Thank you.
Thank you.